All right, welcome to our deep dive on Charles Schwab. So you want to know if this stock, ticker symbol SCHW, is a good fit for your portfolio? We got a whole bunch of articles and financial data here, so let's just jump right in.
Sounds good. To really understand where Schwab is today, it helps to look back a little bit at their journey. They were founded in 1971 and actually started as an investment newsletter. But then they really capitalized on the deregulation in the 70s to become like a real pioneer in those discount brokerage services.
Yeah, it's fascinating how their early adoption of technology really set the stage for their success. Like being the first to offer that 2047 order entry in quotes in the 80s, then embracing online trading in the 90s, they were consistently ahead of the curve.
Absolutely. And that forward-thinking approach, I think, is still evident today. In 2020, their acquisition of TD Ameritrade, that wasn't just about, consolidating market share. It was about getting their hands on innovative platforms like thinkorswim and thinkpipes that appeal to these active traders.
Okay, so they've got a history of innovation and a strong market position. But what about their recent financial performance? The data here shows a 14.41% year-over-year increase in revenue, reaching $25.52 billion. That sounds pretty promising.
Yeah, but there's a bit of a catch. Despite the revenue growth, their net income actually decreased by 29.46%, down to $5.07 billion. And this decline, well, at least partially, it's attributed to their cost of goods sold going up significantly from 6.93% to 26.19% of sales.
That does raise some concerns about their profitability. So is this like a sign of trouble, or are they just investing heavily in, future growth?
It's definitely a question worth exploring. While Zacks Investment Research, they give Schwab a hold rating right now, they also highlight the strong momentum score. So suggesting there's still potential there.
Okay, let's dig into that potential, specifically their innovation pipeline. What are they doing to stay ahead in this rapidly changing financial landscape?
Well, they're definitely not resting on their laurels. Schwab Intelligent Portfolios, that's their robo-advisor platform. It uses algorithms to build and manage those diversified portfolios, tailored to individual goals and risk tolerance. It's a direct response to that growing demand for, automated and low-cost investment solutions.
Right, and then there's Schwab Personalized Indexing, which gives investors even more control, allowing them to customize their index investments based on their preferences. It's a unique offering that could attract a new wave of investors, potentially.
Yeah, absolutely. And let's not forget about Schwab stock slices. This allows investors to buy those fractional shares of S&P 500 companies for as little as $5, lowering that barrier to entry, making blue chip stocks accessible to a much wider range of investors, particularly millennials and Gen Z who might be starting out with, smaller amounts of capital.
So they're clearly investing in attracting those new clients.
Yeah.
But how does all of this translate to their valuation? Is this stock currently overpriced, underpriced, or somewhere in between?
Well, their price earnings PE ratio right now, it sits at 15.81, suggesting that it might be trading at a reasonable valuation compared to its earnings. However, Zacks Investment Research, they give them a value score of C, which indicates a more middle-of-the-road assessment.
Interesting. So it seems like there's no easy answer when it comes to valuing Schwab.
Exactly. It's not just about looking at a single metric. We need to consider, like, the bigger picture here. Their growth prospects, the competitive landscape, and the overall market conditions.
All right, let's talk about those growth prospects then. We already touched on their recent acquisition of TD Ameritrade, but have they made any other strategic acquisitions to expand their capabilities?
Yes, they have. Back in 2011, they acquired Options Express. This move was aimed at bolstering their offerings for active traders. So the TD Ameritrade acquisition, it wasn't like an isolated event. It's part of this larger strategy to broaden their reach and attract different investor profiles.
So they've got this impressive history, a strong market position, and a commitment to innovation. But what are the concrete pros and cons of actually owning this stock?
Okay, let's start with the pros. Their brand recognition or reputation, I mean, those are undeniable assets. They offer a diverse range of products and services, catering to a really wide spectrum of investors. And their commitment to innovation, especially in technology, positions them well for future growth.
Now, it all sounds pretty good, but there must be some downsides to consider,
Ah,
especially given the decline in net income we discussed earlier.
of course, of course. The recent decline in net income is definitely a valid concern. The integration of TD Ameritrade, while potentially beneficial in the long run, it presents significant challenges and potential risks, especially in the short term. And we can't ignore the fact that they operate in a highly competitive industry. with constant pressure on fees and margins.
So it's not a slam dunk. There are definitely factors that could impact their future performance. Before we move on to, dividend policy and other considerations, I'd like to touch on a topic that's becoming increasingly important for investors, ESG factors. Is there any information in our materials about Schwab's environmental, social, and governance initiatives?
The materials provided don't actually go into Schwab's specific ESG initiatives or any related controversies. It seems like this wasn't a primary focus of these particular sources. However, as you mentioned, ESG is becoming a really crucial factor for a lot of investors. So it's definitely something to keep in mind when doing further research.
Good point. Now let's talk about their dividend policy.
Unfortunately, the materials we have here, they don't provide specific details on their dividend policy or share buyback programs.
That's right.
Yeah, it seems like those details just weren't included in the materials. However, even without that specific information, I think we can still get a pretty, comprehensive picture of Schwab. When you look back at their history, there's this clear commitment to adapting to investor needs.
Oh, yeah, absolutely. Like their early adoption of 247 order entry, in quotes, back in the 80s. And then, embracing online trading in the 90s, they were way ahead of the curve. I mean, that kind of foresight, that's pretty impressive.
It really is, and it's fascinating how they've managed to keep that innovative spirit, even as they've grown into this, financial giant. I mean, their acquisition of Options Express in 2011 and then TD Ameritrade in 2020, it shows they're not afraid to, make bold moves to bolster their offerings and really capture that market share.
Speaking of those acquisitions, let's go back to TD Ameritrade for a second. It was a huge deal, right? Bringing in millions of client accounts and all those valuable platforms. But how smoothly did that integration actually go?
That's the key question. While the acquisition, it brought significant potential. It also presented this massive integration challenge, merging two large companies with different systems and cultures and even technology platforms. It's a complex undertaking, and it's definitely something investors need to consider. Did Schwab actually manage to achieve the synergies they were hoping for? Or were there these unexpected costs and disruptions?
Yeah, it makes you wonder how those integration costs might have factored into that decline in net income we were talking about earlier. Yeah. I mean, even with the revenue growth, if they're spending heavily to merge those businesses, it's going to have an impact on their bottom line.
Precisely. It's not just about top-line growth. Investors really need to look deeper into those financials to see how efficiently Schwab is managing its operations, especially after such a big acquisition. This is where metrics like operating margin become, really important.
Right. Like a declining operating margin would be a signal that their expenses are eating into their profits, and that's not a trend any investor wants to see.
Exactly. And it highlights the importance of considering both the short-term and long-term implications of these acquisitions. In the short term, sure, there might be integration costs and disruptions, but in the long term, if they're executed successfully, they could lead to greater efficiency and profitability.
It's a delicate balance for sure. And speaking of balance, let's go back to Schwab's innovation pipeline. We talked about their robo-advisor platform, Schwab Intelligent Portfolios. Seemed like a smart move, tapping into that growing trend of automated investing.
Oh, absolutely. Robo-advisors are becoming more and more popular, especially among, younger investors, those who are comfortable with technology and are looking for, lower cost options. By offering Schwab Intelligent Portfolios, they're directly targeting that specific segment of the market.
And it's not like they're just offering some basic robo-advisor either. Their Schwab personalized indexing is a really intriguing product. It takes that concept of automated investing, but adds that layer of customization, which is pretty unique.
It is. It's a clever strategy. By giving investors that ability to, tailor their index investments based on their individual preferences, they're appealing to a much wider range of investors who might not be satisfied with just a one-size-fits-all approach.
And then there's Schwab Stock Slices, which is, kind of a game changer for accessibility. Being able to buy fractional shares of S&P 500 companies for just $5, it opens up investing to people who might have been intimidated by that, like high cost of entry for blue chip stocks.
Yeah, it's a brilliant move to attract those new investors, particularly, like you said, millennials and Gen Z, who are just beginning their investment journey and might not have a lot of capital to deploy right away. By making it easier and more affordable to invest in these big-name companies, they're potentially building a whole new generation of loyal customers.
So they're clearly focused on growth and innovation, but every company faces challenges, right?
Yeah.
What are some of the headwinds Schwab might encounter in the future?
Well, one obvious challenge is the competitive landscape. I mean, the financial services industry, it's fiercely competitive with new players emerging all the time, especially in the fintech space. Schwab needs to stay ahead of the curve, constantly innovating and adapting to keep pace with these, disruptors.
And we can't forget about the pressure on fees. Discount brokers are in this constant race to the bottom when it comes to pricing. This could squeeze Schwab's margins and impact their profitability.
That's right. They need to find that sweet spot, offering, competitive pricing while still maintaining a sustainable business model. It's a delicate balancing act.
And then there's the regulatory landscape, which is always evolving. New regulations could impact their operations and profitability, so it's something they need to be constantly monitoring.
Exactly. They need to be agile and adaptable, ready to adjust their strategies as the regulatory environment shifts.
So we've covered a lot of ground here. We've looked at their history, their financials, their innovation pipeline, and even some potential challenges they face. But at the end of the day, what does all this mean for you, the potential investor? Is Charles Schwab a good fit for your portfolio?
That's the million-dollar question, and unfortunately, there's no easy answer. It really depends on your individual circumstances, your investment goals, your risk tolerance, and your overall investment strategy.
Right, it's not a one-size-fits-all situation. What might be a great investment for one person could be completely unsuitable for another.
Exactly. So let's break it down. First, consider your investment goals. Are you looking for, long-term growth, short-term gains, income generation, or a combination of these? Schwab offers this wide range of investment products, so it's important to determine which ones actually align with your specific objectives.
And don't forget about, risk tolerance. Are you comfortable with market volatility and the potential for, short-term fluctuations? Or do you prefer a more conservative approach with lower risk but potentially lower returns? Schwab offers options for both types of investors. But it's crucial to choose investments that align with your, comfort level.
Absolutely. And your time horizon is important too. If you have a long-term investment horizon, you might be more willing to, take on higher risk in pursuit of greater returns. But if you have a shorter time horizon, you might need to prioritize capital preservation and choose more conservative investments.
It's all about finding the right balance for your individual needs and circumstances. And that's where Schwab's diverse range of offerings can be a real advantage. They have something for just about every type of investor.
That's right. Whether you're a seasoned trader looking for those sophisticated platforms like Thinkorswim, or a beginner just starting out with a small amount of capital, Schwab has options that could potentially meet your needs.
But even with all those options, it's crucial to do your own research. Don't just rely on our overview here. Dig deeper into Schwab's financials. Read analyst reports, understand their competitive landscape, and really think about how their offerings fit into your overall investment strategy.
Exactly. Knowledge is power. The more informed you are, the better equipped you'll be to make those sound investment decisions. And remember, investing always involves risk. Past performance is never a guarantee of future results.
That's a crucial point. Don't get caught up in the, hype or let emotions drive your decisions. Take a rational, data-driven approach to investing. And always be prepared for the unexpected. The market can be unpredictable, and even the most, successful companies can face headwinds.
That's why diversification is so important. Don't put all your eggs in one basket, right? Spread your investments across different asset classes, sectors, and even geographic regions to mitigate risk. Schwab's platform gives you access to, a wide range of investment products, making it easier to build a well-diversified portfolio.
So, to sum it up, Charles Schwab has a lot to offer investors: a strong track record of innovation, a diverse range of products and services, and a commitment to adapting to, changing market needs. But it's not a guaranteed winner. Like any investment, it carries risks and potential rewards. It's up to you to do your due diligence, understand those risks, and decide if Schwab aligns with your investment goals and philosophy.
That's right. This deep dive has given you a solid foundation of knowledge about Schwab, but it's just the starting point. Now it's time to do your own research, weigh the pros and cons, and decide if Charles Schwab deserves a place in your portfolio.
Yeah, it has been quite a journey exploring Charles Schwab. From their, humble beginnings as an investment newsletter to becoming this financial powerhouse, they certainly made their mark on the industry.
They really have, and their story is a testament to the power of innovation and adaptability, right?
Yeah.
From, pioneering those discount brokerage services to embracing technology so early on. They've consistently positioned themselves at the forefront of change. Absolutely, and that commitment to innovation, it's evident in their current offerings as well. Schwab Intelligent Portfolios, personalized indexing, and stock slices, all designed to attract new investors and cater to those evolving needs.
Right, but as we discussed, it's not all smooth sailing. The recent decline in net income raises those valid concerns about, their profitability. And the integration of TD Ameritrade, while potentially beneficial in the long term, does present its own challenges.
It does.
So, where does this leave us? After taking this deep dive into Charles Schwab, the question remains, is this stock a good fit for your portfolio?
Ultimately, the answer lies in, aligning Schwab's offerings with your individual investment goals, your risk tolerance, and your overall investment strategy. It's about finding that right balance for your unique circumstances.
Exactly. And if you're seeking, that long-term growth and appreciate their history of innovation, Schwab might be appealing. However, the recent financial performance, that warrants some careful consideration. Are they effectively managing costs? Are they investing wisely for future growth? These are questions you need to kind of explore further.
And don't overlook that competitive landscape either. I mean, the financial services industry is constantly evolving. You've got new players and disruptive technologies emerging all the time. Can Schwab maintain that competitive edge? Can they continue to attract and retain clients in this, dynamic environment?
These are crucial considerations. And as we've emphasized throughout this whole deep dive, investing involves inherent risks. Past performance is never a guarantee of future results. It's essential to, approach investment decisions with a rational, data-driven mindset.
I completely agree. And that's why we encourage you to conduct, thorough research beyond this deep dive. Explore Schwab's financials in detail, read analyst reports, and stay informed about industry trends and potential challenges they might face.
Exactly. Knowledge is your most valuable asset as an investor. The more informed you are, the better equipped you'll be to, navigate the complexities of the market and make sound investment decisions.
And if you find yourself needing some guidance, don't hesitate to, seek advice from a qualified financial advisor. They can provide personalized insights and help you create an investment plan that aligns with your specific needs and goals.
Yeah, that's great advice. So this deep dive has provided, a comprehensive overview of Charles Schwab, but it's really just the beginning of your journey. We've equipped you with the information. Now it's time for you to take the reins and make that informed decision about whether Charles Schwab aligns with your investment philosophy.
We hope you found this exploration valuable. And if you're hungry for more in-depth analysis, be sure to check out our YouTube channel, where we delve deeper into, various companies and investment strategies.
And as always, we're eager to hear your thoughts and suggestions. Let us know in the comments section what other companies you'd like us to deep dive into. Until then, happy investing.